All right, welcome to another forex session. Now we'll be looking at how we can trigger a trade in the bearish market. Now it's very simple, very simple. Now let's make use of all the concepts that we have been learning from the first lecture to the very last. Okay. Now I told us that for us to trade the bearish market effectively, we have to have one thing in mind for entry, which is the lower high. Lower high, lower high. That is where you should focus on. Now, this is our market. This is a bearish market. Now, we're going to look at where to put your stop loss and your take profit and how to trigger your entry. Okay. Now, let's assume that the market is still at this particular level. Now, always wait for a break of structure and a retest before you look for entry. Break of structure, retest, then volume. Volume. Let it be a volume candle to confirm the price movement. Okay. In this case, you can see this particular support was broken. You can see this big candlestick to break. Now, the market retested the same level, broke, retested the same level. Now, that the structure was broken is not enough reason to start entering a sell position. Okay, you have to wait for a retracement. Then after the retracement, you wait for a kind of consolidation. Let it be a level of consolidation. At the break of that consolidation is a safer entry. Let me give you an instance. Look at what happened here. The market consolidated here. Now, at the break from this consolidation, you can trigger your entry from this candlestick. You can trigger your entry from this candlestick. Now, let's look for another one. The market moved from this level to this level. Like I told us, you have no business to sell at lower low. It's like going against the trend. It's not like you are going against the trend, okay? Selling at lower low, you are going against the trend. So what you should do, wait for the market to retrace back to what? To the next lower high, which is this. Now, can I take a trade from this particular level? Yes, it's possible, but you must wait for the market to do a level of price movement. You can see price reaction here. Now, after the price reaction, wait for the market to break from that level, which is this. You can see. Now, I know this is very technical. Now, the market retested it. That it retested this level is not enough reason to start selling. Yes, this is lower high. Yes, we should sell only at lower high. But you have to wait for the market to form a level of price action, which is this. Then wait for the market to break from that price action. Now look at this candlestick. The market broke from this particular level. Now, at the break of this structure is your entry. At the break of this structure is your entry. This blue line is your entry. Now, what happened again? The market came down, broke through this horizontal level, broke through it. You can see where the market broke through it and retested. Now, what happened? Your entry, there's no volume candle here for your entry. So you won't be entry until you see a big volume candle, which is what happened here. The market retraced back to form another what? Lower high. This is a lower high. I explained this in the previous lectures. Now, at the close of this volume candle, this big volume candle, that is another entry. Why? There's a level of break of structure. You see it. Market broke through So this is also a very good place to enter your trade. Okay, now that is how you follow the market. You wait for the market to break the structure, retest, then wait for a level of price action, a level of consolidation. At the break of that consolidation is your entry. Now, if you follow this step, you will be able to escape manipulation. You'll be able to escape manipulation. Okay, now we'll talk about manipulation maybe in the next 2 classes. I'll tell you how to actually overcome manipulation in the market. All right, so now this is how you trigger a trade in a bear market. In the next video, we'll look at where to put our stop loss and take profit. All right, see you in the next class.